Could Trump eliminate the income tax? Exploring the complexities. Is it possible that Trump, or any other president, for that matter, could actually eliminate the income tax? The short answer is no, but the issue is far more nuanced than that. Before diving into the likelihood and the complexities of eliminating the U.S. income tax, let's explore its origins and the constitutional challenges it has faced over the years. The origins of the U.S. income tax. Rewinding back to the early history of the United States, one would find that income tax did not exist until 1913. There was a brief period during the Civil War when an income tax was instituted to fund the war effort, but it was soon abolished due to constitutional issues. Constitutional problems with the income tax. One of the fundamental problems with income tax lies in its constitutional ambiguity. The U.S. Constitution does not define what income is, and neither does the Internal Revenue Code. This has led to several Supreme Court cases that have defined income as business profits, not individual earnings. Thus, even after the 16th Amendment was ratified, questions about the legality of taxing individual income persisted. How the government funds itself. To understand the logistics of eliminating the income tax, it's crucial to understand how the government funds itself. The U.S. government relies on three primary sources of income. 1. Taxes. Over 50% of the government's revenue comes from individual income taxes. 2. Borrowing. The government borrows money to cover the deficit between its expenditures and its income. 3. Printing money. The Federal Reserve plays a role by printing money and purchasing U.S. Treasury securities. The impact of eliminating income tax. If the individual income tax were eliminated, it would cut the U.S. government's funding by half. This would necessitate increased borrowing, leading to higher interest rates and potentially more aggressive money printing by the Federal Reserve, which could result in inflation. The problem with more printing and borrowing. More borrowing would increase the national debt, leading to higher interest payments, which could spiral into a sovereign debt crisis. On the other hand, printing more money dilutes the value of existing money, effectively acting as a hidden tax that disproportionately affects the poor. Political and economic realities. Even if a president like Trump were to attempt eliminating the income tax, it's unlikely that government spending would decrease proportionately. Historical data shows that even when taxes were reduced, spending often continued to rise. This would likely result in increased borrowing and money printing, leading to higher inflation and economic instability. The impact on wealth and economic growth. Eliminating the income tax could theoretically increase individual wealth and stimulate economic growth. However, if the lost tax revenue were replaced by inflationary measures, the benefits might be negated by rising living costs. Conclusion: a complex, unlikely scenario. While the idea of eliminating the income tax is appealing to many, the practicalities and consequences make it highly unlikely. The government's reliance on income tax, combined with the political challenges of cutting spending, means that any attempt to eliminate the income tax would likely lead to increased borrowing and inflation, ultimately harming the very people it aims to benefit.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.